Hello traders and welcome to another video review. Today is Thursday, December 8, 2022. Let's find out what is going on the Forex calendar. As you can see, I have only the most important events for today, and one of those was the GDP, gross domestic product data release from Japan. So for the third quarter, the actual reading was minus 0.2%, which was worse than minus 0.3% expectations, and definitely wasn't the previous reading of 1.1%. So we will definitely take a look at the Japanese yen pairs during the next part of this video. There is a ECB President Lagarde speech scheduled twice for today. First is 1 p.m. and then there is 7 p.m. So that might be kind of an interesting event as well. Maybe she will give some remarks regarding the financial markets. And of course we have a data from the US in form of the initial jobless claims. Those data are scheduled for release 2:30. The initial jobless claims are set for the advance from 225,000 to 230,000. So slight improvement here is being expected, and that's about all of the most important data that are scheduled for release for today. Let's just switch to the technical part and take a look at the US dollar to the Japanese yen. This is for our chart of the US dollar to the Japanese yen pair, and what do we see here is the ongoing downside movement from the top. Top was located at 150.80, and it looks like this market doesn't want to stop moving lower after the top was made. So we got this very nice line. I will make it as usual, I will make it orange so you guys can see. This is the trend line, right? So we got the 4-hour trend line. If we make the chart a little bit bigger, then you can see here that we are still trading, of course, below this line. Nevertheless, the market in the longer term is still in the uptrend. The recent low that we made here, if we use the horizontal rate, the recent low was made at 133.64. You can see the bullish engulfing pattern on the 4-hour chart, so very nice indication of a possible up move. Then of course the up move continued towards the level of 137.87. So we have this slight jump to the upside. Nevertheless, if we take a look closer to this for a while, okay, let's just take a look a little bit closer. Let's zoom in. You can see that this is the wave 1, wave 2, wave 3, wave 4, wave 5. Look at this. This is a perfect textbook example of the impulsive wave here. So we got wave 1, we got wave 2, we got wave 3, we got possible wave 4. They do not overlap, and we got wave 5. So this is how it looks like. Yeah, this is how it looks like. Can I just move it lower? I want to move it here. There you go. This is what I mean. So we got 5 ways movement to the upside. Let me just take a look if I can. No, I can't. What we should see now, ABC to the downside, went into some Fibonacci retracement. So let me just put some Fibonacci retracement for you. So here it goes from the top to the bottom this time, and the Fibonacci retracement somewhere here. If we zoom in, then we can see it much more clearly what is going on. Let's zoom in even more, and what is going on here. We retraced 38% already. Now we are bouncing a little bit higher, but still 50% waiting to be hit 135.77, and 61% located at 155.28. So any of these retracement levels can be hit during the wave 3 progression. So basically, let me just point it out. What do we have here? We got the top for the wave 5, possible wave A, possible wave B. Now we are waiting for the wave C towards 50% of the Fibonacci retracement or 61% of the Fibonacci retracement. This is the plan. And of course, if we are done with the correction, we already have something like a bearish engulfing pattern on a 4-hour chart during the wave B, right? What we are waiting for? We are waiting for another extension to the upside, right? The 5-wave extension to the upside should start sooner or later, and this is the 5-wave extension to the upside. This is only the ideal situation that we are waiting for, right? So that's our plan for the US dollar to the Japanese yen. Of course, this plan gets invalidated. The deeper we go in the retracement, then this is worse for the US dollar to Japanese yen and our scenario. So 61%, 135.27. Please keep an eye on this. This one is not that often used. Nevertheless, it can be useful as well. And the lows of 133.64 is definitely the level that invalidates our scenario. So this is the US dollar to the Japanese yen. Let's take a look at the other pairs. For example, let's take a look at the euro to the Japanese yen. What is going on here? For our chart, let me just zoom out a little bit, and you can see straight on that we got very interesting here, interesting candle here with the top located around the level of 148.34. So from this level, we got, of course, the trend line as well. We got the trend line moving lower towards the recent low. As you can see, market respects this trend line, so we can, of course, change the color for the standard one, the orange one, so we know that this is the long-term trend. And it looks like this market might even move inside of a channel. So let me just see if we can do the parallel channel. Yes, something like this is still, there you go, is still possible. The market is moving inside of the channel, and it looks like this is apparently a corrective channel. So we got the movement to the downside. Where is the technical support? Well, basically the technical support can be found somewhere here at the lows from the 10 of the October. So we will place it like on the level of 140.85. That's the level. Nevertheless, you can see, no, it's okay, this is a good technical support. We have a very nice bounce, and we are going back towards the upper channel line. Again, the recent local high was made at the top of this candle. This is, of course, 144.53. This is nice pin bar. Let me just zoom in. This is very nice pin bar here. So right now we are just waiting for the market to maybe just touch the upper channel line and then reverse lower. It doesn't look like the momentum is helping to move to the upside. However, the momentum is still positive, 54 points. So bulls have a control over the market. Nevertheless, if you take a look at this, you can clearly see that this movement here was impulsive, and this is clearly overlapping up and downs, whips up more trading inside of the channel. It's clearly corrective. So it looks like sooner or later we will have another breakout to the upside, and we should put we should put more attention, I guess, towards these levels here. Basically, I guess that might be one of the most important levels, 144.89 technical resistance. Okay, so the other one is, of course, this high here, 100 and let me just remove it, because this thing doesn't actually work very well. What I want is this high, 146.08. that's the technical resistance as well. And the other one is, of course, the level of 147.05. So this is that level, and the highs of 148.54. So breakout above any of these levels would exactly mean that the bulls are back in town, and then they want to party, and they will party hard because they are breaking another technical resistances. If you take a look closely at this at this recent bounce, you can clearly see the recent bounce is impulsive as well. So what do we have here is the low here, wave 1, wave 2, wave 3, wave 4, wave 5. We can label this that way, so we are waiting for ABC to the downside and then upward rally. All right, so this is the situation on the US dollar to the Japanese yen. Let me just take a look very briefly at the gold market. Let me just switch to the daily time frame chart. And what is so interesting on the daily time frame chart of gold is apparently this line here. Let me just close the magnet. This line here that goes, of course, from the very top. As you can see, it's been respected many times. Okay, let's leave it again orange, and recently we had a breakout. So the breakout went up towards the Fibonacci retracement, right, and we managed to retrace around 38%. So as you can see, let me just move it here a little bit, so you can see it, 38%, 1790 retraced. We just hit it, then straight on we got the test of the technical support, local technical support. We're still going up, broke above the 38% of the retracement. Now the target is 50%, 1842. This is the next target, and the other target is even much more interesting. This is 1895, and let me just put it on the screen because this is the level I would like you to remember, because it's the technical resistance as well. So we will make it red. So this level is the key level to the upside. We have a nice breakout. If the bulls want to continue higher, they need to break above 1894. So this is the momentum in the upper half of the RSI area. Right now it's 61.60. strong, nice strong positive momentum. Slight bearish divergence here, so we expect some kind of a pullback, and then the shoot for the 50% of the Fibonacci retracement, and then 61% of the Fibonacci retracement. So this is the outlook for the gold. The breakout continues. Higher levels are expected after the local pullback is completed. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.